Warm welcome to everyone. It's so nice to see a jam-packed audience for such a very niche course, which is the FEMA course. I'm very impressed with the arrangements done by Mr. Vinod Jain. He just called me. I never knew him, and he just reached out to me. The subject was FEMA, so I could not say no. And then I came to know, seeing your number of degrees, I am very envious about your illustrious, the way you are going ahead. I think you can take all the sessions, all the 17 sessions which are there in the course. Thank you, sir. It's an inspiration to me. Thank you. Very happy to join this course for the three very illustrious organizations. Something new which I have learned today is the keywords which are mentioned here. There are 13 keywords here, starting from truth and ending with vision. This is something very innovative. Second, the concept, from concept to expertise. So I think in 2 days we are all going to be moving from concept to expertise in this session. One more uniqueness which I have never seen in any program. It's starting at 2 p.m. and ending at 9. So it's very unique. Nowhere in my 25 year of any speech or my delivery of lecture, this is the timing I have ever seen. So it's amazing, unique thinking, which helps you to work half day and then also gain knowledge. I think only chartered accountants can do this. Most of the profession would never work after 5 o'clock. I think this is a dedication mainly for chartered accountants who want to give knowledge to their clients as well as to themselves. The whole program is excellently structured, 17 sessions in 2 days. 45 minutes is very good to give you an overview. Definitely you can't cover the subject because we take generally 1.5 to 2 hours for each session. But the way we are structured here is in this 45 minutes we'll give you an overview. But however, the slides you are going to carry with you, which will be a very complete information about what stands for the organization. I will not cover all the slides because it's very self-explanatory, but concepts will cover, which will be quite enough for this session. Okay, just few, since this is almost like the second or the third session, and there are FEMA practitioners or somebody going to learn FEMA, please understand RBI is supreme under FEMA. If you think I have a new interpretation where I can think comma is not there, so this could be a different meaning, or if you feel that this is my understanding, please leave that thought. Everywhere whatever RBI says is final. Only way is then go for compounding or go for ED. So please think first, is this in the spirit of what RBI is thinking? One. Second most important, go to RBI or your AD bank for any guidance. If he says yes, it is a doable transaction, please do it. Don't apply your intelligence. Don't read any case laws. Don't read any other views of people who give any aggressive view. You will be in problem. We are saying for last 30 years we are seeing this issue. Please kindly go by the letter and spirit of the notification, master direction, circular or any other material available. And last thing, what you cannot do directly cannot be done indirectly. There are questions here which are asked, can I do this, can I do this? Mr. Mohanty sir also said, what you cannot do directly cannot be done indirectly. Please don't plan your affairs. Okay, coming with the subject, the topic given to me is ECB and trade credits. This is the whole index. I will not scare you. It's just an index, but we are going to cover everything, but in the timeline which is given to you and in a very structured manner. Okay, so so what is ECB? Idea is, earlier we thought only foreign investment was allowed. Just to give a brief history, you know, what was the birth of FERA or FEMA? It all started in 1991 when Mr. Manmohan Singh was the finance minister, P.V. Narasimha Rao was the prime minister. He was the one who had visualized. It's not any government, it was Mr. Narasimha Rao who thought we need foreign investment in India. And in 91, he came with a new economic policy. With that policy, somewhere in 94 and 97, the whole liberalization took place. We had Marutis of the world, Suzukis of the world coming to India. We had several foreign companies coming to India. It's all between 91 to the year 2000. Big investment came in. What changed? We as a practitioner never thought of practicing FERA. It was a very draconian law. FERA 1973. It all started somewhere in 94 when a lot of liberalization took place. We all started learning somewhere in 94. Then in 1999, FEMA came in. 1st May 2000 was the birth of FEMA. And finally, we are seeing the FEMA regime. It's all thanks to RBI. Tremendous liberalization. Thanks to RBI, we didn't have the Asian crisis, which was in 1997. A country like Korea had to borrow $60 billion at that time because the RBI there was not functioning well. And we as a country never had to borrow at that time. It was only because of RBI. So what is ECB? ECB is something where one portion is equity and second is other than equity, what you can have it, this is debt. But government wants to see that we don't have that crisis of foreign exchange. So it's a long-term debt given by any entity to Indian entity, and it's like a repayable amount. We are talking of repatriable, non-repatriable, but it's something which is fully repatriable. When you borrow money, there is a procedural part which we are going to deal in future. So what is a popular funding option? We have ECB, what we call classic, non-convertible debenture, partially or optionally convertible debenture, preference shares, partially or optionally convertible debentures and preference shares. So basically anything what is non-convertible and not fully convertible, right? That would be ECB. What is fully convertible, that is called equity. For example, you issue 100% fully convertible debentures. So it's going to convert into shares. Then the FDI regime comes in. But when you say optionally convertible, there is an option, it could be debt, so it's an ECB. Okay, so this is the regulatory overview. How do you learn this topic, FEMA? RBI comes with notification. Then nowadays master direction comes, which is very helpful. APDIR circular are there. FAQs are there. And the main section is section 262 of the FEMA Act. This is the overview of the entire ECB operation. Next is what is ECB? It's a commercial loan raised by eligible, please see the red underlined, raised by eligible resident entity from a recognized non-resident entity conforming to parameters such as minimum maturity, permitted end use, non-permitted end use, and maximum all-in cost ceiling. All-in cost means the borrowing amount. What are the forms of ECB? A banker can give you, a foreign bank can give you loan. There are other loans, securitized investments, trade credits above 3 years, FCCB, FCEB, financial use. These are all forms of ECB, and these are the parameters for an ECB. Just to know, if you feel that is it a very big transaction, why I should learn ECB? See the statistical on the government website. You can see from 2018, from 19 to 24, these figures are only for 3 months, basically the current year 24. Already $9 billion has come in automatic route only for 3 months. And almost $20 billion has come under the automatic route, only from April to June. You can see the size of the market. I mean, why you should learn this topic, why you should know about this structure, this is the statistics from RBI site. So what is the limit? Each company per year can borrow up to $750 million. So almost 5,000 crores is the limit under automatic route. It's not small. Small companies can borrow up to $5 million without complying with any debt equity ratio. You can be even 1:20, there is no problem, subject to any other guidelines. But you can go as far as 1:20, but if you are above 5 million, debt equity cannot be more than 1:7. But if you don't comply, you can go to RBI for approval route. So what are the key parameters? It's almost same repetition, but here there are more area like end-use prescription, limits, and the currency of borrowing. Who are eligible borrower? Can everybody borrow? Yes, there are certain criteria. All entities who can receive FDI. You know, LLPs cannot receive FDI basically, right? It's an investment basically, it's not an FDI. So they are not eligible to get ECB. Generally private limited, public limited. Then they've added Port Trust, SIDB, units in SEZ, Exim Bank of India. These all can borrow in foreign currency. Just to repeat, all entities who are eligible to receive FDI, they are governed by ECB guidelines. In this, LLP is not permitted. It is there also in the FAQ of RBI. They say it is not permitted. If it is in INR ECB, all entities which are mentioned here in foreign currency, plus they've added companies engaged in microfinance, NPOs, non-profit organization, societies, trust, cooperatives, NGOs. These also can borrow. There are many sugar cooperatives in India, cotton cooperative, milk dairy cooperatives, they all can borrow INR ECB. Can anybody lend? This is the biggest question. Can just anybody give me money? No, there is a list. RBI wants to know from whom you can borrow and whom you can lend. So first we see the recognized lenders. Any lender should be a resident of FATF or IOSCO compliant country. What is FATF? As you said, Mr. Jain said about the grey list, blacklist. Here they only restrict from the blacklist country. Currently blacklist are 3 countries, Iran, North Korea and Myanmar. Currently they have put this list. Maybe they can add more in future, but currently these are the 3 lists under which it is under the blacklist. So, and IOSCO is where, how we have SEBI, that way every country has a Security Exchange Commission. If they are part of the IOSCO organization, in that case, that country is also allowed for giving the loan. And then additionally, some multilateral institutions like Asian Development Bank, IMF, etc. Individuals, if they are foreign equity holders, about 25%, or foreign subsidiaries or branches of Indian Bank. Like we have ICICI Bank, say in Canada, State Bank in Singapore, Bank of India or Bank of Baroda in USA, their branches can also give ECB. What is the tenure? The tenure is ideally 3 years in most cases, but it can go where suppose a non-investor, non-foreign equity investor wants to give money to me, somebody individual, and is not a 25% partner or an equity holder, he can go in the 10-year category. Otherwise, it can be ideally for 3 years. If it is manufacturing, it can be as low as 1 year. Generally, it's not practical, but it can be as low as 1 year. So, idea is 3 year is standard, can go up to 10 years. This is the standard norms for ECB maturity period. Most important, unless you comply with all the parameters of ECB, it cannot be a transaction which is approved by RBI when you get a loan registration number. Again, the standard restricted list we have seen in other categories also. Chit fund, if the investment which are going to borrow, the ECB loan, it cannot be used for activities like chit fund, that is end use basically. Chit fund, nidhi, investment in capital market, agricultural or plantation activity, real estate activities including farmhouses, trading in TDR, or for any on-lending purpose, further lending to somebody. Now, having learned who is the lender, what is the maturity period which is allowed, who can take it, now we come to what could be the cost. The cost is basically this rate, all-in cost, includes rate of interest. What is that value will come to the next slide. How much is the interest you can pay, but what that amount includes, we are just putting up. Rate of interest, other fees, expenses, charges, guarantee fees, export credit, agency fee are all included in the next slide what we are going to see. This is all inclusive cost. What is not included is commitment fee. For example, if I take the loan but I don't use it, then there is a commitment fee which is charged, that is not included in the all-in cost. And second is withholding tax. Many times many countries says I don't get a tax credit in my country, right? I don't want, if you deduct tax say 5 or 10%, whatever is the value, it's your cost. Please gross it up under 195 and give it to me. Then it is allowed and it is not included in the all-in cost. Earlier there was LIBOR, but post December 21, LIBOR was a big scam. US and several countries used to manipulate it. So now they've come up with something called alternate reference rate. Popular ones are SOFR, SONIA, Euribor, there are so many of them. And what is the rate allowed is, you can take that rate of 6 months tenor. Currently it's around 5%, the SOFR or whatever you call it, Euribor is around 4%, plus 500 basis point. So you're borrowing, you can pay as high as almost 9.5 to 10% as of now. If you borrow in ECB, there is a limit. It's not what you can pay. That's the maximum limit. You can even get at 0% if it's from a parent entity. So this is the maximum all-in cost what you can give. If it's in INR, they benchmark it with the government securities. So currently it's around 7% for a 6 months tenor, plus 450 basis points. So it becomes around 7 plus 4.5, which is almost 11.5%. Up to that amount you can give. Reason for higher INR is because they want to even structure the exchange loss which the foreign entity may occur, basically. So currently these are the three very popular ones, SOFR, SONIA and Euribor, and these are generally used by all the entities post December 21. In case you want to change currency, yes, from USD to Euro or from any other country currency, there is no problem. Only INR ECB cannot be converted to foreign currency. Otherwise, internal changes, you feel that Euribor is more better than the currency at which I borrowed USD, or you feel that Japanese yen is more better in long term because I may have a lot of earnings in Japanese yen, you can always change the currency of your choice. It's not very important, but the idea is to say that whatever you borrow, 70% of your exposure has to be hedged, and this is what the banker would insist upon you, and they will ensure that you have, if you don't have a foreign exchange cover, natural hedge, they want you to cover at least 70% of your outflow. So you need to buy the hedging premium or take the premium for the exchange. So as I said, you can borrow, but there is a limit. If you borrow up to $5 million, there is a limit of 7:1. But if it is borrowing is above $5 million, you need to follow the guidelines. I mean, you need to follow 7:1. Below 5 million, there is no limit. You can even be 1:20. That's not a problem. Having learned what is the funding arrangement, can you, if you have raised the money, can you park it abroad? Because I need to pay for some machinery which I'm going to pay to my supplier outside India, or I'm going to give it to some purchase of capital goods where he is situated outside India. I can park that money in a bank outside India, keep that money maximum up to 1 year period, but see that I use it for that purpose. And then there are criteria about the credit rating where you park the money. You can't park the money in your own bank account. There are criteria where you need to park your money. We have seen several scams happening in few entities who on paper said they have raised money, but money was lying in an account and ultimately there was no money in the account. So then they came with the criteria where you need to deposit the money which are raised abroad. Same way for Indian rupee, normal, you put it in your bank account. Up to 12 months fixed deposit is allowed. Put it in the banker from where you have applied for your LRN number and where you are going to utilize the funds from that account. Yeah, for example, I have a project in India. I'm an Indian company. I have a project in India. 30% of the goods or machinery I'm buying from India, and 70% I'm importing from abroad. So that 70% is foreign currency. So I'm taking foreign currency. If I convert into Indian rupee and then further pay in foreign currency, I will have an exchange loss. So to avoid that, they say, okay, you park the money there, so you don't have a foreign currency loss. For example, I raised $100 million and $70 million I can park it in a bank outside India. $30 million I convert into INR, where I need to pay to Indian companies, say like L&T, Thermex or any other company in India. So that's how the difference is. The expenditure part is what is mentioned here. If you want to park it abroad, deposit or CD or other products offered by banks rated not less than AA minus, or treasury bills of 1 year maturity period of a foreign entity, or deposits with foreign branches, subsidiaries of Indian bank. These are the three options only available to you. There have been cases where people could not pay the loan and they said that, sorry, can you allow us to convert this ECB into equity, or my project is not going as per my planned schedule, I am not able to pay the interest. So RBI has recently come out with a provision where you can convert this ECB into equity. Obviously, the situation is they need to check why you need to convert. Lender's consent is required. Generally, they convert equity in case of a foreign entity or a foreign parent who knows that my future of my company is very good, so they would like to convert into equity. The pricing formula, which is the fair market value, is adhered to. Consent of the lenders are there. And the conversion will not breach any FDI guideline. For example, there is a limit of say 50% or 51% in a particular sector, that is not breached because of the conversion to equity. It's a very, very good provision which allows to reduce your debt and further increase your capital. Okay, having borrowed, this is a very critical point. Many of the ADs or clients don't know. You can give security of all your assets in India whenever you raise an ECB. For example, if Indian company is raising, even their shares can be pledged, movable properties can be pledged, land and building can be pledged, subject to it's free and there is no charge on that, or there can be a pari passu charge subject to everything. And most important, the clause has to be there in the agreement. We have seen many cases client come to us, earlier they took the loan, the bankers didn't insist on pledge of or charge of immovable property. Now they say, no, you're not able to pay, give me a particular security. RBI doesn't allow. They say there is no clause of those pledge or security in the agreement, how can I allow you? So we have to change the agreement, go for an amendment in form ECB2 or in the form ECB, add it in the agreement, and then RBI permitted. So please ensure that whenever ECB agreements are there, have the clauses of personal guarantee, securities of everything in the agreement. You may or may not invoke it, but there should be a clause of it. So what is this deemed ECB? See, generally if you see your trade payables, you are supposed to make payment within 6 months ideally. In a worst case scenario, 12 months banker will allow. If you go to RBI, up to 3 years they are allowing in case of a trade payable. For example, you have purchased some raw material from an entity outside India. You are ideally supposed to pay that money within 6 months. But if you don't pay that money within 6 months, maximum window is 3 years with RBI permission. If you exceed even that, the government counts this as a deemed ECB. You have to comply with all the provisions of ECB, and that's where it's called, the word is deemed ECB. Who's saying I can't see you? Okay, yeah. Can you say again?
Yeah, if there is a dispute between this creditor and the company,
correct.
Will it be a deemed ECB after 3 years?
No, dispute does not come into picture here. This is what is a confirmed payable money, right? Because see, your dispute may go for even 10 years. For example, you may be in a court of law saying quality issue, quantity issue, or maybe some other reason, probably. He has not given you on time when you wanted it. And now okay. So reporting requirement to ECB, where the question asked is, so what is the documentation? It's very simple. There is a form ECB which you need to file, right? In physical form. Even today there is no online electronic form for ECB. It's a physical form first. Second most important, you submit it to your banker. He will verify everything. There is a summary sheet which CA and CS only can sign and certify. You please verify everything. Then the bank will forward it to RBI after having checked that all the 7-8 parameters like recognized lender, borrower, end use, terms of condition, MAMP, everything is complied. And once it is done, RBI will issue one LRN number. There is division of RBI DSIM, Department of Statistical Information Management. They will issue, it is in Bombay BKC. They will issue an LRN number, which is like your PAN number. For each ECB, there is a separate LRN number. So this is issued, this is very simple. Within 15 days, once you file from AD Bank to RBI, AD Bank may take some time to check whether you are eligible. But once it goes to RBI, in a worst case scenario, in 15 days, you get this LRN. Even sometimes even same day, you get LRN number. Yeah. So what does RBI or AD Bank verify? Verify that borrower is eligible, lender is recognized, permitted end use is there. That way means there are certain negative lists. There the money is not going to be used. Adhere to the MAMP, which is the minimum maturity. Comply with the interest cost, which is the all-in cost borrowing. Whether they have obtained LRN number, and drawdown is done after the LRN number is issued. In fact, I've seen so many cases where they first take the money and then the drawdown is there, so which is a violation. Yeah, so this is the slide on which somebody asked me, can we change? See what all can be changed. The drawdown repayment schedule can be changed. The borrower can be changed. For example, there is amalgamation in the parent entity who has given the money. So there can be change of the borrower also, we need to inform. Recognized lender can be changed. For example, borrower name has changed or it has amalgamated with somebody in India. That is one category. Second is the lender can also be a part of M&A process. They can do it. You are going to give these slides, no, Vinodji, to everybody? Okay. Because I see many people taking pictures. Please, you can please consume it. It is for your own use. End use of the ECB, those negative list of 7-8 items are not there in the end use of the ECB, like capital market, real estate, agricultural, etc., Nidhi, chit fund, etc. So end use can be changed. For example, I have taken for a manufacturing category, but now I want it for a working capital or a general corporate purpose. I can always change it, but I need to inform to RBI. Cancellation of LRN, when it happens where I have taken LRN number, but the lender has not given me money till now, right? So I should keep on filing ECB to nil every time. I would rather cancel it and close the transaction. So that is where you can even go for cancellation of LRN. I can change AD bank. If I find the AD bank is a PSU bank, sometimes you are not getting proper support from their FEMA team or from their branch, right? And they don't have anybody in Bombay, and you need to suppose it's a South Indian bank, their head office is in Chennai, and the FEMA team is in Chennai. You feel I'm not comfortable. I would rather go with a bank which has a FEMA team in Bombay or Delhi where you are, and they are more responsive. You can change your AD bank subject to the consent. Currency of borrowing can also be changed from US dollar to euro, euro to Japanese yen or any other currency. Drawdown schedule, which you mentioned, that also can be changed. You can say one shot bullet drawal, or there can be even stages over a period of say 1 year, 2 year, every quarter you can keep on changing. The value can keep on changing. I expect 1 million, but now I'm getting only 100,000. Next year I can get $2 million. Even the drawdown schedule can be. So these are all changes which you have to report in the revised form ECB, and then when you inform, just mention the reason why you are going to change the parameters, and most important, it should be agreed and approved by your AD bank. So these are having taken the entire money. What you need to do is every month, which is very, very critical. I would tell everyone, you may feel it's very easy. It's like the marriage, karna bahut easy hai, nibhana bahut difficult hai. Same way is like this. ECB, taking ECB is very easy. Filing form every month before 7 physical, it is very difficult. Your client will never cooperate because 7th it should reach RBI physically. So imagine on 1st or 2nd you should get the data, you verify it, give it to your banker. He verifies it and then he gives it to RBI. So in that period of 7 days every month, it is a Herculean task. You need a team in your office and a client office to ensure that this is done basically. So what you file with the document every month, it's mentioned here, bank statement, because they want to see the end use. So you file your LRN number copy, ECB form, bank statement, drawdown utilized detail, and the supporting document. So it's a very, very laborious task. So for conversion, just like the way you get money equity, form FCGPR is filed. For balance, you file ECB2, and then on the forms portal, you file online for the allotment of shares. Okay, this is the question about the delay. See, there is a new scheme called LSF which has come in. This is only for reporting delays. If there is a issue, what RBI has got, simple thing, 7,500 is the base amount. You plus you say 0.025% of the amount involved in delayed reporting, multiplied by delay in number of months. They have a standard formula. You pay that fee. There is no exemption, no condonation. Simply go for this LFS scheme and you need to pay to RBI. Okay, for the startups, there is a special 3 very important thing. There the MAMP can be, average can be 3 years, unlike others are 5, 10 years. It's only 3 years permitted. The rate of interest, very important, against 8 or 9%, it can be even 15%, no problem. So, mutually agreed between borrower and lender. So, this is a very good change, and maximum allowed is $3 million. This is the only slide, only 3 things which are different from the ECB for the startup. But startup means those which are approved by DPIIT, that is what they call as a startup. You see the second point, only physical submission of form ECB and underlying documents within prescribed time is what is the regulation says. Practically what sir has said is done by the bank, it's very good. ECB, basically it takes 15 days to a month. So if you want to immediately use the money, I mean you can't go for an ECB, you need to plan it, because drawdown, approval, it can't be that tomorrow I just send the money and then apply for LRN. That's not possible. Proper agreement has to be there. No doubt agreement, you don't have to file with your form ECB to RBI, but at least LRN number has to be given. Since many are chartered accountants, section 94B to be considered when you are making payment of ECB loan, because there is something called in Income Tax Act, something called thin capitalization. Up to 30% of your EBITDA, the interest can be paid to related party. Anything above that you need to carry forward. So that's just something, a passing reference I would like to say, because many are chartered accountants. Yeah, so for example, there is an individual shareholder. He is holding 25% and he is going to give ECB, right? After giving, I am no longer a shareholder. So that's not permitted. Till the whole repayment is done, I need to be a shareholder, there cannot be change. These are the generally committed contravention we have seen. Drawdown before LRN number is taken. The permissible end use was taken for manufacturing but used for corporate or general purpose, or for some negative lists which are not allowed, right, is not an eligible borrower basically. Availment from non-recognized lender, non-adherence to MAMP, reporting requirements, breach of all-in cost, delay in payment of trade credits. So these are standard. If you see the compounding orders on the website of RBI, you will find 99% would be amongst this. Ideally in that case you should go for conversion to equity only, rather than the next topic is on the trade credit. ECB is done, ECB is a long-term advance. Trade credit is something where an importer in India is importing goods. The supplier wants to give him credit, say okay, you pay me after 1 year or within 3 years. So that's a trade credit. Or can be situation is that a foreign bank is funding you in India, right, for your capital goods or for your raw material. That is the difference between buyer's credit and supplier's credit. In a case of supplier's credit, the seller only gives you credit basically, right. In a buyer's credit, a foreign bank, say for example, Japan is promoting all these metro projects. So Japanese banks or institution only are funding the Indian government or the metro company or the SPV which are executing the projects in India, or the bullet train project for example. It's a supplier's credit or a buyer's credit kind of situation. The all-in cost only differs, otherwise everything what we have discussed for ECB almost remains the same. Where there is a reduced all-in cost which is approved as compared to the ECB, where you get up to 450 or 500 basis point over and above the benchmark rate. Again here security can be of any properties like movable, immovable, personal guarantee, corporate guarantee, everything is possible. Thank you very much for a patient listening. My slide, I may have gone little fast, but my slide covers everything. Nothing is missed out from the regulation on ECB.